Hi there, welcome to Nappy Invest. We're in the middle of July right now, and we're starting to see more and more Appendix 4Cs being released by non-mining companies and quarterly cash flow reports being released by mining companies. And I am on a mission to create a video on every single ASX company that releases an Appendix 4C or a quarterly cash flow report that is operational cash flow positive. And the reason I want to do that is simple. The best returns you can get on the market in terms of small cap companies are those that are operational cash flow positive. And it is quite substantial, the difference between the returns you can get from those operational cash flow positive companies compared to negative operating cash flow positive companies. This is a period from 2001 to 2021. A company that is operational cash flow positive has a return of 872% over 20 years, and compare that to a negative operational cash flow company, which has a return of negative 5%. The benchmark during this 20 years period is 323%. So you can see why I'm obsessed with finding those small cap companies which are operational cash flow positive, hence my mission. Today's video will be featuring a company called Phoenix Resources. This is a junior iron ore producer. They've only been in production for about 5 months. The first shipment was in February of this year. And when you look at their cash flow reports for the last 2 quarters, March and June quarters, you can see why I am interested in this company. You do have to be a little bit wary about iron ore producers right now because iron ore prices are at, I won't say historic highs, but they're at levels that are not sustainable over the longer term. So I'd classify any iron ore company as not a long-term hold because we will see eventually the iron ore prices come down a fair bit. But in the meantime, Phoenix has started production at the ideal time when iron ore prices are at sky-high rates. And those prices have continued. So they're making a bucket load of cash right now. And the question for management moving forward is what do they do with the cash they are making in their business right now? Phoenix ticker code is FEX. And when I did a video on Phoenix for their March quarter cash flow report, the market cap of Phoenix at that point in time was 135 million. Now it's around 198 million. We'll say between 190 and 200 million, depending on the share price. So you can see the share price has almost doubled in the past 3 months. Revenue operating cash flow is a trailing 12 months. So actually it's to the end of December. And to the end of December, this company was not in production. That's why you have no revenue and there was no operating cash flow. Things have completely changed for this company over the last 6 months or for the second half of this financial year. And we'll see those numbers when they release their full year results in August. If you want more information on Phoenix, they release their quarterly activities and quarterly cash flow reports on the 13th of July. They also released a presentation. I'll quickly go through their activities report. This is not something I go into too much depth. I prefer to look at numbers. I'll focus mostly on the performance at a glance and looking at the product sales for lump and fines increase from the previous quarter. So from 113,000 wet metric tons to 129, that's for lump, and fines have increased from 107,000 wet metric tons to 151,000. They did do 5 shipments this quarter compared to 4 shipments the previous quarter. So that's one reason those product sales have increased. And one of the major things here is C1 cash cost. They've gone down from 93.2 to 85.3 this quarter. I believe Fortescue, which is another iron ore producer, their cash costs are something like 20. So for these junior iron ore producers, that's the main thing you have to be wary about is those cash costs, because when eventually the iron ore prices come down, and in the past iron ore prices have been lower than the cash costs that Phoenix are at right now. That means in those times, business is not viable for these sort of companies, and that's why only the big producers remain sort of operating during those times. So just just keep that in mind if you are thinking of buying these sort of companies for the long term. You will go through cycles, and that's definitely true for Phoenix, and will be true for Phoenix if they remain in production for the next 5 to 10 years. The average grade shipped for the June quarter has increased from the previous quarter for both fines and lump, exceeding expectations and their ore reserve model. And they also mentioned the ratio of lump to fines was 52% to 48%, which is higher than the life of mine assumed average between 24, which was 25 to 75%. And they did mention they do expect a reversion to those assumed levels as the planned pit deepens. Before we look at the June quarter operating cash flow, I just want to go back to the March quarter because the March quarter was quite stellar, and this was the reason I did actually buy into Phoenix. 30.6 or $30.8 million of receipts from customers, which meant the company was operational cash flow by $21.9 million. They spent $7.2 million of capital expenditure. They did get $1.7 million through the exercise of options. Began the quarter with $10.3 million of cash and finished it with $26.7 million. And because they have no debt, the enterprise value at the end of the March quarter was $108 million. And we'll see if that has increased during the last quarter, and it should be, because when you look at the June quarter cash flow report, it is quite impressive. And here is the June quarter operating cash flow for Phoenix. Receipts from customers for the quarter, $83.6 million. And some of this was helped, particularly with the operating cash flow of $45.1 million. Some of this was helped by the fact that they did get more from what they sold and the cash costs have come down. So $45 million in operating cash flow, and they only spent $3.5 million in capital expenditure. So the free cash flow of the business for the quarter was more than $40 million. They also received about $1 million in the exercise of options, began the quarter with $26.7 million in cash, and finished it with $69 million. And because they still have no debt, the enterprise value of the company was $129 million, which seems fairly cheap for a company that produced $45 million in operating cash flow and more than $40 million in free cash flow for one quarter. In my opinion, one of the most important functions of management is capital allocation, or what do they do with all the cash that is coming in the business. For instance, they can issue dividends, spend money on research and development for future growth, acquisitions, they could actually do that sort of thing. So what they're going to do with all this cash coming in the business is of utmost importance. And in their, I think it was in their activities report, they did mention a capital allocation policy. So they are going to review all these considerations and then come up with some sort of plan of what they're going to do with all this cash that is coming into the business. Wouldn't surprise me to see them issue a dividend, a fairly good dividend at that. It would surprise me if they do any acquisitions, because this is not the right time to acquiring iron ore projects, because iron ore prices at won't say a record high, but they are fairly high. Maybe they could do an acquisition to diversify, but this is one of the most important functions of management, is these sort of decisions for a company that is making a lot of money. Onto the chart for Phoenix. This chart, daily chart, goes back to May of 2020, when the share price was around 3.5 cents. What a great time would have been to pick up this company back then, just like many other companies on the ASX. A well-defined uptrend over the past, we'll say, almost year, and I've portrayed that uptrend with that sloping upwards maroon line. We've seen that uptrend touched a couple of times, once in November, December last year, and then again in March, start of April this year. And both times it's touched that uptrend. We've seen the share price take off again. I do have 3 horizontal blue lines, and those 3 horizontal blue lines here correspond to a share price high. And every single time we get a share price high, for instance, in August last year at around 19 cents, again towards the end of this last year, start of this year, share price was around 28 cents. And then again in middle of May this year, share price was 38 cents. So every time we get to that high, we see the share price pull back a little bit, and then we see the share price pull back towards the previous high and then rebound again. In fact, we saw that perfectly play out in May this year. In fact, middle of May, share price went to a high, share price pulled back because of a bit of weakness in the iron ore prices, and then the low in the share price at that point in time at 28 cents corresponded to the previous high we saw about 5 months previously. And then the share price took off again. In fact, it's gone from 28 cents to a current high of around 44 cents. Wouldn't surprise me to see the share price go towards that 48 cents for 47 cents as the new or next high, and then pull back and try to test the previous high, which was around 38.5 cents. When they Phoenix released their March quarter results in on April the 23rd, which is when I bought. The response from the market was fairly muted on the day, but then the next day the share price took off. Very similar to what's happening today on July the 13th when they've released their June quarter results. Fairly muted response from the market. In fact, the share price was as low as 40 cents, down about 5%. It has recovered back to 42 cents. We might see exactly what we saw during the release of the March quarter results when we saw muted response on the day, but then the major response was the next day. We'll see what happens in the next few trading days. I do think the market expected these results, so this is to expectations, but in the conference call, it wouldn't surprise to me, the conference call was at 11 a.m. I'm recording this video at 12 p.m., so at noon. I have not listened to the conference call. I'll read the transcript later. We're not surprised to see the company say in the conference call they do expect another good quarter in the September quarter, which would mean we should see the share price continue to rise from here because we might see another big increase in the cash on hand for this company. And that is all for this video on Phoenix June quarter quarterly cash flow report. If you have any questions about this company or any other company on the ASX, particularly those who are releasing Appendix 4Cs or quarterly cash flow reports, I would love to hear either your opinion or a question from you. I'll try to answer anything you have to say when I have a bit of time. I am on leave in a week's time, and that will give me plenty of free time on my hands. I've been quite busy over the past week or 2 weeks. The last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.